Welcome to TradeTheMBI.com. This is John's reports for the 23rd. Well, there you have it, the breakout once we moved back above the EBM yellow. Skyrocket City after the NVIDIA blowout, which I think presents some, like we were talking about, broader issues with the overall idea that the bond market had that rates were going to somehow come down anytime soon. And I think what we saw from those results and their expectations is doesn't look like that's a likely outcome. We can see zero short activity relative to uh, all of this little softness from MBI Magenta, and that didn't create anything of relevance. Cyan is now under red, and we've got a complete reset here of DOC red, and midterm buyers also jumping into that strong. So 100% jump in, no shock with any of that. Nasdaq's a little bit behind; it hasn't quite broken out to the new highs, but it had been the relative leader, so it gives S&P a chance to kind of catch up to where things are, and the suggestion that there's vitality left in the economy. And you can see with those readings, it's not quite as strong from a DOC reading, and that is the S&P, but those results certainly shifted the mood, so to speak. Still didn't get enough of a reaction from treasuries, and that still holding off. Rates still not high enough from a treasury standpoint to draw from the market. So from that standpoint, the market's still the only play to be. From an oil standpoint, still holding within the range. So it's on the precipice of a problem, but hasn't fully emerged into a breakout issue. And should we get any of that, that would be the signal that the Fed may have to go into reverse course, which means more tightening. I think they're just going to allow what's already taken place to absorb and continue to work through and stabilize things. And, fortunately, they didn't go too far to shut things down completely. And that's exactly what they were hoping to do. And it may have been enough to quell things and lead to the future, uh, expansion of economic growth, which was the idea in general. And so far, the Fed has been fairly spot on given how things have worked out. So go figure. Don't often compliment them on that kind of reality, but in fact, that's what we're seeing. So got to go with what is. From a euro standpoint, yeah, it's problematic, and no matter how many spikes you're going to get with there, it's still going to be tough because of the draw against the euro into other uh, currencies, simply because they have to buy commodities to do so many things, and eurozone is just not producing. From a gold standpoint, um, relative softness, given the reality of the potential for inflation is there. It just hasn't emerged yet. So until there's a catalyst that actually shows that, and I think oil is really going to be our bellwether in determining that, which it usually is in that case. But we'll go from there. From BTC standpoint, that softened a little bit of the crypto excitement because, again, it's better play to be in equities at this particular point if things are, even if not robust, they're holding on and doing just fine. Likewise from an ETH, and plus they've already had a massive run, so it's perfect for them to consolidate and really just absorb the increase, particularly as you get closer to the Bitcoin halving. From a 50K standpoint, you can see that was clean. We saw it from the beginning, and it unabated. Of course, a lot of positive extremes, and that kind of excess usually creates it. Would not be uncommon to see fill backs into this early set of the second positive set of extremes, and not hard to mark those values and see exactly where they are. But needless to say, beautiful run and zero short interest in this one. So it's just a clear, straight up move. From an intraday standpoint, once it started, never really ended. You've had some soft fill ins to take care of some of the positive extremes, and that's been a healthy thing. So here in post market, just a little back and forth, nothing special, just testing to see if there's any supply availability under certain supports. But as of now, not a whole lot of that. So I would think that you probably get more of an inside day today and fill back a little bit of that extreme move. But overall, I don't see any problem with the continuation of things. That's the long and the short of it. Pretty simple. But volatility is still up there. I mean, those are big moves. Just because it's to the upside or even to the downside, we're starting to get a broader range, and that's simply reflective of some of the uncertainty, but also just the dynamic of markets needing to, make more of a move and rotate from place to place to capture better yield, because as some of these get a little frothy, they have to spend some time consolidating, and that's where you're able to move into broader areas, and that's where you start to look into small caps and other things. But needless to say, it's still easy enough to read from our broader ES and NQ standpoint. Anyway, have a good one. Long and the short of it, market continues to plug away, and nothing on the news front is abating the continued push higher. As always, though, anything relevant, I will put on the Skype chat. Have a good one.